What is up, my Forex for Beginners family? Okay, today we're covering Fibonacci retracement. And what the heck is Fibonacci retracement? Well, Fibonacci is actually a mathematician, Italian mathematician. And so basically there's a lot of things in life like objects and circles and patterns that use this mathematical formula, and it reoccurs in various aspects in the world. Like I said, in plants, in trees, in flowers, anything. But if you want to do more research on that, you can go ahead and do it on your own. But today we're covering Fibonacci retracement. Okay, so how does this apply to us? Okay, so what I'm first going to do is, it's actually the tool is on over here. But before I start, again, if you haven't signed up for TradingView, start your Pro or Pro Plus account. It's charting software. If you want to be a trader, you need to invest in some sort of charting software. And MetaTrader 4 is not good enough to be doing accurate chart analysis. So if you want to be a trader, you need to invest in some good charting software. So what we're using and we're training on is TradingView. I'll leave a link below after this video or before this video. If you haven't signed up, go sign up. You get a 30-day free trial. If you like it, great. If you don't, then maybe don't trade. I don't know. It's up to you. Anyways, so Fibonacci retracement. So it's actually, if you haven't favored it yet, let me just find it. I think it's here. Okay, so if you go to this tool right here, and if you hit this little arrow here, Fibonacci retracement, we don't need extension, just make sure this is clicked right here, Fibonacci retracement, and then it'll show up right here. You can drag it and put it wherever you want. So, whoops. Okay, so I'm gonna just click on it once and then bring it onto your screen here and click once your left mouse button, drag it down and click again to save it or let it sit on your chart here. Okay, so you can see all these levels here. What I'm going to do is I'm going to hit this little gearbox and it's going to open up this window. Basically, what I want you to do right now is either take a picture of this or a screenshot, because after this video, or you can watch this video again and go through it slower. Right now, I just want you to watch and pay attention. But basically, you're going to input these settings into your own TradingView charting account or your Fibonacci retracement settings. So go ahead and just make a note. See how these are all checked, these check boxes, these numbers, these levels that I've already put in. This trend line here, you can click black and then see whenever you, sorry, wrong thing. 1 second. So all I did is accidentally hit coordinates. Just go back to style if you do that. So see how this one is kind of checkered and this is black. This is, I guess this is slightly checkered. 23%. Yeah, so 23%. We're going to actually we'll leave it about that halfway. But anyways, why I'm doing this is because if you look over here on the right, see 88%, it's kind of just kind of not as bright as these other ones. So these bright ones, 78.6, 100%, 61%, 38%, and 23 I think is a little grayed out, and 0%, and negative 27%, and negative 61%. So basically the ones that are really dark, those are our most looked at levels. So I'll explain later more. Just go ahead and just copy these settings. Make sure you write down all these numbers correctly. This one's a negative 0.618. And this one I have over here, but you can really put it anywhere as long as it's checked and you have this number put in. And here, see how this one's checkered? You can just select blue and then scroll this down. And all this does is, if you look over at, see this is 88%. So if you look right here, 88.6%, you're actually modifying that. So if I go all the way left, it's really dark. So if you look at 88% on the right, or if you go all the way right, it's almost invisible. So I just leave it about here. So see how it's kind of like faded? That's how we want it. So why we do that is so 100%, 78%, 61%, 38%, 0%, and negative 27, they stick out because they're going to be our most used levels. Okay, so again, so just make sure all these are checked, make sure all these numbers are entered correctly. This one here, this one here. What else? Levels, price, percent, have them checked. Labels, have it set to right and middle. And that's about it. And here, this is adjusting like the darkness. See this line right here? I like to have it right there because I don't want it too noticeable. I just want it there, but not really obstructing my view of the candlestick. So just copy these settings, and here we go. Okay, so Fibonacci retracement. So I'm just going to delete this one time. So just click on it and hit delete again. So you click on it once. If it's a downtrend, you click from the high to the low. And if it's a uptrend, you're going to go from bottom to above. And so what this does is, if actually I'll show you a little bit lower. So if I scroll down here, I've already kind of drawn in a uptrend. So this is an example of a uptrend. So in the last section you should have watched, I believe it's the last section, it was on market structure, and we learned about how once price is moving in a trend, you'll see it'll go from a lower high to a higher high to lower high to a higher high in an uptrend. So we use the Fibonacci retracement tool in a trending market. So when you see the market making a lower high, a higher low, a lower high, a higher low, that's when we use Fibonacci retracement. So what we use Fibonacci retracement for is to measure when price, see right here, price broke out, came to this level, and then what we call this coming back is retracement. So Fibonacci retracement, we're actually measuring how much the price pulls back. And then usually that most ideal spot, that's why I talked about 61.8 and 78.6%. That's why I highlighted it here, just to kind of show you a little better. What I'm teaching you is we're gonna take trades mostly when they, let's just say always, so we are not deviating. So always, when we use Fibonacci retracement, we're going to be looking for 95% of the time price to come between 61.8% and 78, and then reverse. And this is where we would potentially join the trend and buy. So we would buy, and negative 27% is these are actually our targets. So 0% is the first target. So when price comes from here and hits 0%, that's actually our first target. Ideally, I like to take profit at 70 or negative 27%, and negative 61% is grade, or it's a little faded because, you know, sometimes trades go much further than this target. This is target number 3. But what I've done in the past, and I've learned from my lessons, that really you need to start taking profit. When you're in profit, take profit at 0% or negative 27%. Otherwise, it might retrace on you and come back to where you took or where you put your buy trade, and you end up making no money. So when you're in profit, make sure you take profit. And it sounds maybe kind of funny to say, but honestly, I did that for many years. I would want to wait till it went all the way up here and take profit up here. But you know what? What ended up happening is it would come to here and then retrace back to my entry area, and I'd either close it $0 profit or maybe even a loss. So get out of the mentality that when you take a buy that you're going to ride it forever, because it's not realistic. The market makes lower highs, higher lows, lower highs, higher high. So our goal is just to catch one of these strides and take profit. That's how you do it. Okay, so let me move this back like that, and then I'll delete this one. Okay, so why I also wrote, you can remember this way too. When you're using Fibonacci retracement, you go from point A to point B. So let me delete this and I'll show you again. So we go from point A to point B, and you're wondering, why is my mouse over here? Well, actually, I'm just stretching it to the right, but I'm aligning this line with point B. And that's when we sit back. So when price goes up, that's when we sit back and we wait for price to go to point C. And after price gets to wherever it's going to stop, we don't know. It could go all the way to 100%. It could go to 78%. It could go to 61%. It could go to 38%. Or remember this, when it goes to 23%, that is normally a continuation. That means the move is so strong that it couldn't even break this level, 23%, that it's most likely going to shoot up. So that's when there's a strong move. It'll come back to 23% and then keep going. But as I'm going to show you, many times price sometimes comes to 38%, sometimes comes in our ideal area. It'll spike to 61.8, maybe play around here, and then continue on its journey. So it'll reach point C, and then point D is where we take profit. So A, B, C, D. Just remember that. Okay, so this is an uptrend. You can see this is how we use Fibonacci in an uptrend. So now I'm going to go to a downtrend. So a downtrend, I know this looks a little crazy, but there's a lot of information I actually want to show you here. So here, you can see I labeled take profit 1, take profit 2, take profit 3. So we use Fibonacci to, some people are like, well, how do you know when to take profit? Well, we can use Fibonacci to, along with market structure, but right here, Fibonacci, it shows us our take profit area. So let me remove this and show you what I mean here. So because we're in a downtrend and we're making a lower high, a lower low, a lower high, a lower low. So say from here I run my Fibonacci tool to here. So say it comes all the way to the right here, lower low. So I'm measuring from here in a downtrend. So this is point A, point A, point B, point C. So I drew all these lines here because just to show you that price could go to 38% and then go to our take profit. Price could also go to 61.8% and then go to our take profit area. Or price could go all the way to, whoops, price could go all the way to 100%. So this is where in the last chapter to do with market structure, I talked about break a structure. And when there's a break of structure, that's when a new trend begins. See how we're in a downtrend, making a lower high, lower low, lower high, lower low. And when I said a break of structure happens when we retrace 100%. So what does that mean? So see here, point A, we ran our fibs. So I'm going to delete this again just to show you. So we're going from point A to point B. Point B is right here. We're watching retracement. We're hoping it goes to, say, our ideal area, which was between, let me highlight this again. I said our ideal area is between 61.8 and 78.6. And that's when we would possibly sell in this area. So here, that's why I put a sell. So this line represents where we possibly might sell around, and then we'd put our stop loss just above this level here, and then our take profit area would be take profit. I like to go take profit 2, but you know, greed keeps us from being profitable, so let's not be greedy. Either take profit at take profit 1 or take profit 2, or if you've made a lot of profit that week and you want to take a little more risk, I always have Bitcoin notifications going. Sorry, ignore that. So yeah, either take profit 1, take profit 2, or take profit 3. So let me delete this. And like I wanted to continue up here, like I was saying, when there's a break of structure, that's when price goes from point A to point B and goes all the way back to 100%. So that means price went from this point, made a lower low, and retraced 100%. 100%. And this is when a possible break of structure happens. When price passes this 100% level, it usually will break out with some force, come back, might retest this level, and then start a new trend. And that's when a new trend starts, when structure is broken. So I just want to point out how Fibonacci and break of structure relate to each other. So I'm going to delete that right now because we're not looking at break of structures. We're just looking at retracement levels. So just remember, price could come to 38%, it could come to 23%, could go to 61%, or it could go all the way to 100% and still maintain structure and then head down. So that's why I suggest taking trades from this level here. Ideally, if it spikes to, if price comes up and spikes to this area, this is where we would place our trade. Why I like placing trades from this area opposed to 38.2%. Price goes there quite frequently. But the problem is if you place a sell from here, so say you from 38.2%, you place a sell here, you actually have your stop loss is going to have to be all the way back to 100%. Like price could go back all the way to 100%, and if you placed a sell here, you have a large stop loss because price could go all the way to 100% and then continue on its way without breaking structure. It's all about the lower lows, sorry, the lower high, then lower low, lower high, then lower low. Is this going to make a lower high and then continue down, or is it going to break structure? Always. You always have to think about this. Is it following structure? Is it breaking structure? And if it's following structure, then we use fibs and we we place trades in the most ideal areas, and between 61.8 and 78.6 is an ideal area. So now I'm going to actually show you what this looks like on the charts, so you can actually visualize what I'm talking about. So let me just show you this first, which I kind of drew out here. Wicks. Okay, so a candlestick actually. So because we're on the daily chart, each one of these candles, here, I guess, sorry, the other way around. Each one of these candles, because we're on the right up here, the daily chart, each one of these candles represents 1 day of price movement. So what makes up a candle? You have the body and the wicks. So this is a wick, this is a wick, and this is the body. So if this is a daily candle and it's going, say it's dark blue like this, so it means it's a bullish candle, it's going up. This is right here, the body tells you where price opens. So price, since this is a 1 day candle, it started right here at 0-100 hours, and then it closed here at 2400 hours. So why I'm telling you this is when we draw our fibs, I like to go from support, so where price found support. So I usually like to go from the bottom of the body to the top of the wick. So if you see here, I normally go from, sorry, I'm doing it backwards. I usually go from the bottom of the body to the top of the wick. So just keep that in mind. So the bottom of the body to the top of the wick, so right there to right there. And then in a downtrend, I do kind of the same. I go from the wick to, actually, sorry, I go from, one second here, I go from the body to the wick, right about there. But when we start, what I want you to do after is just, we're going to practice this on your own charts, and you're going to get familiar with it. So each one of these lessons I want you to do after again, like I always say, and practice this one new lesson on your own charts. So let me delete this, and let's go actually look at some actual price movements here. So what I did here is I kind of drew in the candle. So you see how it's going from let's call this a high to a lower low, to a lower high, to a lower low, to a lower high, to a lower low. So we would call this a trending downtrend. Okay, let me actually get rid of these. They're not supposed to be on the charts. That's for another lesson. So here, let's examine this area. Let me get rid of some of these lines. So this is actually an example of break of structure. So we're going to pull out our fib tool, and we're going to go from the body, so like the lower or the top body, and we're going to the very the wick down here. So all these bearish candles, we're going to go to the wick. So we're going, let me just drop it in here. Second. Okay. And then I'm just going to highlight this. So we went from the body right here, the body, to the bottom wick right here. So that is, it's like we're measuring the move. So this downward move came here, and that was the lowest point. It went from it found resistance. That's why I go from the body, and then it shot down, and we want to measure from the very bottom. And this, you're going to play around with it a little bit based on what you see over here. So it's just going to take practice. So let's see what it's showing us. So price shot down, found support there, and then retraced. Where did it retrace to? So see here, it actually went past 38%, and it actually found support on it and went up to 88% and 78% area. So this is showing a lot of like bullish momentum. So I wouldn't have taken a sell trade on this one, but this is an example of break of structure. So this is why I was saying that look how price shot up to here, came down to 23%, and then shot up to 100% level and actually broke it, came down, found support on the 100%, and continued upwards. So that is an example of break of structure. It's not an example of how we use Fibonacci to enter a trade, but it's an example of break of structure. So this is just the example that showed up and we used it. So this is an example of Fibonacci with a break of structure. So let's continue moving on. Let's see where my next markup is. So here we're in a downtrend. See how I made a trend line? It touched here, and we're trending. So because we're in a trending market and it's a downtrend, this is an example of 38.2, I believe. So let me just delete that. Let's try to run a fib and see what we see. So I'm going to go from the body all the way to, one second here. Actually, let me get rid of these lines first. Okay, so back to here. So I'm going to go from here and put it about there. So you can see I went from here and price moved in this one stride and found support right here. That's where price reversed. So that's why I put 0% right there. So what are we seeing here? We could see that price shot up a little to 23%, got knocked down to 0%, came back up, tested 38%. See that? See this one right here? This guy actually right there, came back down, came back up, came back down, fell below, right here, price fell below the 23% and continued down, and look where it went. It went to our take profit areas. So this is an example of, that's why I wrote here 38.2%. So when price came from here, found support, came and touched 38.2. You could see it was struggling there. We're seeing all these engulfing patterns. When I say engulfing is when, see how this white candle, it completely engulfs the candle to the left. That's showing you that there's a lot of sellers, and it's happening after it taps 38.2%. So this is an example of where price held at 38.2% and then continued to our take profit area. So look, we could have took profit at, this is why I wouldn't, because when you're going at 38.2% to 0, there's not much profit. But if it's at up here, if we're taking a trade from 78.6% in this area and 61.8% area, then we have actually quite a bit of profit. So we could take profit at 0%. But in this case, it's we're selling from 38.2%. and then we're maybe taking profit at our take profit 2 area, negative 27%. So that's an example of 38.2% retracement. I'm just going to delete that. Hold on, what did I delete there? Don't want to delete my monthly line. Okay, so now we're going to go over here. So I want you to just do this on your own. So we're on the daily chart. I just want you to get familiar with this tool. So here it's an example of 61.8%. So let me show you a couple things here. So we'll go to our fib tool again. We're going to go from, we'll say, actually I'm just going to go from here. I'm going to go from the body of this guy and see how it actually price goes to this level. So if I put my tool here, you can see that price only made it to one second. Price only made it to 23%. And like I said before, when price moves and it comes to the 23% and it retraces to the 23%, see this line here, 23%, and it can't get past that, or see how this bearish engulfing, this candle engulfs this one. This is showing you there's lots of sellers, and normally when price gets stuck at 23.6%, you're going to see a fast move to downward, and look at actually how fast that move was. So this is an example of 23.6%. But why did I put 68.1%? Because I want you to get in a routine of doing this. So let me just delete these. When price, okay, so when we run our fib tool from here down to here, right here, when you see price getting stuck at 23%, we're just going to move down to the next lower level. So just remember that when price gets stuck at 23%, sorry, here, when price gets stuck at 23%, we're just going to move it down to the next level. The next level is here, and we're actually not seeing any retracement, so price is just moving really fast down. So we actually will move the fib tool all the way down to here. So from here to where it actually finds support. Here I didn't use the wick because this was maybe some news event, or normally this huge wick is not ideal. We don't like wicks. We like when the market moves in a nice predictable pattern. So, but here, maybe if you were in a sell, you could have reached a good take profit. But anyways, so here we're going to go from here down to where it found support, and now we're going to take a look. We're going to take a look. Hope you can see this. Let me just move this around a little bit. You can see our 61.8% level is here. So this actually is a scenario of what we like to see. So we can see price came up to our ideal area. So here price found support, came up to, it's actually our monthly level as well as 61.8. So when there's multiple reasons to sell, or there's multiple reasons why you think price will go down, it's called confluence. So in this case right here, price came up, and this is what we call confluence, is when we have multiple reasons. So price came to a monthly level, we're expecting it to bounce off the monthly level. It did, but it stopped at 23%. So all of these levels are good for you to look at, because it found support here, bounced up to 61.8%, came back to 23%, and we're actually just looking for, we don't care while it's bouncing. Again, I'm just going to put this here just to make it clear. This is point A. This is point B. This is now point C. Let me just change that to point C. So as you can see, price came into our ideal area. We could have taken a sell off here once we saw an engulfing pattern. We could have took a sell off here, but what would have been better is taking a sell off of our ideal area. So see, we saw price come spike up to this level, and it quickly came back down to around the 61.8%. And when the price started to engulf this one, we could have took a sell opportunity right here. So don't worry about the whole when to sell or getting the precise entry. I actually have a winning strategy that I'm going to teach you. Right now, I just want you to understand that how Fib works. We use Fib to measure retracement, and it usually comes to these levels that I'm showing you, and the more you practice, you're going to see that these phenomena or these repeated patterns keep happening. And you're probably asking, well, why do these repeated patterns keep happening? Why? Because everyone in the world is doing chart analysis just like I'm teaching you right now. So when you have millions and millions of people doing the same analysis, they're saying, hey, price is coming up to 61.8%. Let's get ready to sell. And what happens? Price drops. Price drops because everyone in the world is analyzing charts the same way I'm teaching you. So in the future, you can analyze the charts on your own, and you don't need to depend on anybody. You can make your own money by analyzing the charts. This is a one-man game, and it's amazing. So that's why I'm really excited to teach you these things. Okay, so this was an example of 61.8%. It came into our ideal area between 61% and 78%. Here again, it's an example of 23.6%. Let me just get rid of this. Let's just fib it, see what we see. So from the body down to where it found support. Let me just make this a little bigger, get this out of the way. So yeah, so you can see here, price came down, found support, retraced to our 23.6%, and then we saw a engulfing pattern right here. This candle engulfed this guy, and like I said, when price comes to only retraces to the 23.6%, you're most likely going to see a fast sell. And look what happens. It hit our take profit 2 and 3. So again, our Fib tool is how we measure retracement, and it shows us our targets for a buy and a sell area. And one other thing I was going to show you before I forget, see this right here? This is notifying me that news releases are happening. We want to normally avoid trading during news releases because the markets get wild then. You know, when there's a news release, it can have a sharp shoot up or a sharp shoot down. And you usually want to stay away from those areas. If you're already in a trade and you have your stop loss already in profit, then no problem, right? But how we view this tool, this notification for news coming out, I believe you go to, so just right click your mouse and go to settings, and then go to events, and here, where is it? You can select everything I have here, but oh yeah, right here. Show economic events on your chart and show only future events. So it'll only show me what's coming up. So that's another great reason why TradingView is the most amazing charting software, is because look, it gives us notifications for when, it does a lot of things, but here I'm showing you that it gives us notifications for news releases. So we're not blindsided when we're in a trade. So I think that is all I made for this chapter or this lesson, Fibonacci retracement. I want you to we're going to actually switch charts. So today I marked up AUD USD. I've developed a amazing winning strategy that I'm going to teach you. So I want you guys to, you had practice marking up charts in my previous lessons. Now I just want you to go into here, go AUD USD, and you can pick this first one here, FXCM, and we're going to start analyzing this chart. So when we start trading, we want to focus on one trading pair. If you're doing too many trading pairs at one time, it's hard for you to understand what's going on or really figure out how this particular pair moves. So from now on, I want you guys to be marking up the AUD USD charts. So go back and review the previous lessons if you need to, but I want you to go and mark up your monthly and weekly support and resistance levels using line chart, how I taught on the previous lessons, and then you can come back and then start practicing fibs. Start practicing fibs like I showed you right here, from here to here. What happened here? Look. Came to 61.8%, spiked there, went down. It happens all the time, and I want you guys to just notice these things. Let's see what happens here. Found support here, look, 61.8%. This would have been a perfect sell. Why? Because look, it came, spiked up to between our ideal level. It spiked in this zone. This is the ideal trade right here. So the spikes go into this zone, but we actually don't want it to like hang out in the zone. We like it to just spike, and then this candle right here is the bearish engulfing. So what that means is this candle engulfs this entire candle. Once we see that, we can place we can place a sell in about this area, and we can set our stop loss. We can set our stop loss to about right here, and then we would have been in a lot of profit. See, look, it hit our take profit 2 and 3. So this is an excellent example of how you use fibs. Okay, so I want you to go ahead and practice all this. Don't worry about focusing on this entry, like trade entry areas. I have an amazing strategy. It's going to make it super simple for you to figure out when to place a trade. But I want you to learn the basics, and that's why I started this group, is because I want you guys to focus on chart analysis. Once you get your chart analysis down, then trading will become simple. So go ahead, practice Fibonacci retracement, get familiar with it, and I'll see you in the next lesson. Thanks for watching.